how to speak actually with investors and what they are expecting from you. Okay, let me share the screen. Up. Zoom is not sharing correctly. I'm using Google Meet. Usually it shares exactly what I need. Okay, so let me start with the simplest. Let me start with the structure of the pitch. By the way, how many of you have already pitched to investors?
Me, last week.
Last week, and it was like in the within this program, or was it like your personal address, personal introduction, connection?
No, it was a demo day from Accelerator.
Okay, thank you. Anyone else?
Yeah, we
also the same
on different projects repeatedly.
Okay, cool. And so who from you have already closed the first round of investment? Are there any?
Well, we almost did it like more than a year ago. We even created a UK company. We signed all the agreements, and in the final stage, like the fund that wanted to invest in us like fell apart because one of the members was doubted in fraud and so on. So other partners like closed the fund.
That sounds like a story for Medium.
Well, we spent like half a year closing the deal, and at the final step, we failed to close it, and it was a very hard blow to us. So we kind of stopped seeking investment for a year and focused on business.
Okay, I see. Good. So, like, not good in your case, but in general, good. So, let me show you the agenda for this session. So, firstly, we would go through different definitions to stay aligned with terms. Then we would go through the components of the ideal pitch structure for the investor at pre-seed, seed stage, and as far as understood, like the average stage of the present startups are pre-seed and seed stage. Then we will speak about different investment entities types, what is investor pipeline, and how to speak with investor and what kind of materials should we have in order to impress the investor. Okay, so firstly, definitions. So when I'm speaking about investment entities, I mean all kind of investors. It can be from business angels and investment funds, VC funds, to some kind of international organizations that are just basically given some kind of grants and so on. And it also includes incubators, it also includes accelerators and corporate investors. Next, I want you really to distinguish between investor deck, pitch deck, and product or sales deck. Because the first thing you always are building in your company is the product or sales deck, right? Something that you're going to your client with, something that you're going to your partners with, and so on. Then when you are taking part in something like demo day in the accelerator or any kind of startup conference, you're preparing a pitch deck. So basically, like well-structured, very easy to comprehend and to perceive presentation with the really little of information that just serves as a support to your presentation, because when you're pitching, you are the person, you are the focus for the investors, for jury panel, or whoever is listening to you. And so pitch deck is just supporting you somewhere in the background, right? And then there is an investor deck. This is something I'm always asking for from the startups when we just connect with them. Yes, so for instance, I have connected recently with the startup from Armenia. We just exchanged with some words, and then I asked them, okay, can you please share your investor deck? And so what I'm expecting them to share is what we are going to go through in our session. And then pitch, public presentation, I think that's clear for all of you already. Yeah, so ideal pitch structure. And I will also share later the link where I basically speaking about this all in a blog post on our on B-Values blog page. Yes. So first of all, always remember about saying hello to everyone and, adding name of your company and logo and so on. And you can also put there your contacts, the name of the CEO or founder, or who is the contact point for the investor. And you can either divide it into 2 slides or put it together, add elevator pitch. Yeah, I have some like referral. I'm always going to Airbnb presentation. It's the best presentation ever. You can easily Google it. It's basically everywhere. And so, for instance, their welcome, their hello slide is basically explaining who they are. Like, hop, and I got it for what they are offering, what they are building. Book rooms with locals, run hotels. Air bed and breakfast, absolutely clear. Or for instance, I also like this Mattermarks elevator pitch. They say that they are organizing the world's business information to answer questions about the companies you want to do business with. Absolutely clear and absolutely simple. And your kids or your mothers would easily understand this explanation. This is what elevator pitch is. And it should be also in investor pitch, same as in pitch deck for the presentations on the stage. Then, of course, you're speaking about problem and pain. I think that's clear. You are describing some kind of situation. You are telling about something that you have ran into or something that you can see that is falling apart in your industry. And so with the next slide, you're explaining how are you going to solve this. Yeah, first of all, you're explaining the solution, and then you're also telling how your product is actually providing the solution to that pain. This thread should be absolutely clear and transparent, right? And also don't forget to tell about what kind of product do you have. Is it the website? Is it the mobile app? Is it kind of CRM system or CMS system? Or I don't know, it's maybe some IoT system, or maybe you have hardware plus software. I mean, be clear here, because I've been through so many decks where, I've been reading them from A to Z and back again, and I couldn't really understand what kind of product are they building. So if you want to eliminate that kind of glitch, you can also include the demo screenshots of your product, or it's even better, you can include the link and then login and pass for the investor to actually enter your product, if that's software, website, or mobile app, and check it out, right? Because then the investor will be able to, touch your product. It should be feasible, and then they can imagine how this product can actually work, operate in the market, how it will conquer the market for you to earn money and give them return on their investment. Then also, if you feel that you need to explain why exactly this product would be good to appear on the market, you can add some extra slide speaking about value added to the customer. So you can compare how they were before using your product and how they would be after they have started using your product. Then, of course, a very important part is business model. How are you earning money? Cash is the most important thing for all the investors, whatever they say to you, because they always looking for money. If not for them, then for their limited partners that stand behind their backs and waiting for money. Yes, so also be very clear with your business model. Next, coming unique selling proposition or your unfair advantage on the market. Many of the companies that are being developed in our region.
Sorry, can I ask a question about the previous slide, like business model?
Yeah.
Like, for example, we have a commission model. Should we state exact numbers because there are kind of different commissions for different things, or we should say it's a commission model and that's all?
Again, it's for investor to understand your particular model and way of thinking. That means that you provide all the possible information that is important to understand and estimate your business. And so, yes, you include all the packages you have in your subscription model. And when you have, for instance, freemium or any kind of other trial version for 7 days, 14 days, whatever, you also include this information, because this even more relates to your go-to-market strategy slide, but it can be here as well. And it shows to the investor that you understand how you are going to acquire customers, right? Because for subscription models, it's like one of the most obvious way to acquire customer is to have the trial or freemium, right? I mean, there are different companies, so they should have different subscription models as well. So yes, you should include the numbers. And also, it is also important to have here information about your customer. Who is your target customer? Who are you selling your product to? And if you have subscription packages, they can be for different kind of customers. For instance, I know that there are some companies that have, for instance, free package for some, I don't know, NGOs. Then they have some basic plan for startups. Then they have some pro plan for small and medium enterprise. And then there is an enterprise actually package, which either has its price on the website or it just has, some kind of form. And then you negotiate this price with the customer at the direct call or however you organize this. So this should be also identified, because the investor should understand what customer are you targeting. That's absolutely important, because if they know this, if they see this, they start comparing this to other similar or likewise, similar products on the market. For instance, let's speak about streaming platforms, like those that are providing everything necessary for streaming online conferences now. Yes, so you have Hopin, you have Pinetool AI, you have Swapcard, and now already dozens of other companies like that. They are basically providing everything that the organizers would need in order to, take their conferences from offline to online mode. And all of them have their different business models. And for instance, Bizabo, which was used to be just a ticketing platform and also kind of CRM for organizers. Now they have also built the streaming on top of the other services they offer. But if you compare Bizabo to Pinetool AI, for instance, you will see that Bizabo is selling only to corporate clients, only to large enterprises. And so their average check starts from $20,000 per year. And if you can offer them less than that, they will not even work with you. You can try that, they will tell you no. But Pinetool AI, in comparison, they are focused on small and medium enterprise. That's why they're using different communication, they are using different customer acquisition channels, and they have absolutely different market at all. Yes, so this also should be included in business model. And yes, of course, all these prices, they should be there. Because also some of these investors that are very good in subscription model businesses, they will start even calculating this like in their head when they see this slide. I've seen that. Yeah, in our fund we have the Israeli advisor, and he is very good in calculating everything he sees on the slides. So you should really have that. Then next, so unique selling proposition advantage. I think that should be clear. why are you better than your competitors? Why I, as an investor, should invest in you rather than the other guy from, I don't know, Belarus. Again, same thing was in my funds a couple of weeks ago. I introduced my colleagues to the company from Germany, but they were speaking at the same time from the company from Belarus. They have absolutely similar product in general, but they are serving different target customers. And one of them has some extra features that might even add some additional customers, some additional customer persona. And so they would cover a bigger piece of market than another one. So this is their unique selling proposition. For instance, they can also sell their platform to e-commerce, not only usual retail offline shops, while the other one can only sell to offline shops. So you can see if you have retail, I mean like offline retail plus e-commerce, of course you're better than the ones that have only offline retail. Competitors. Here it's, again, if you are new, if you are just started speaking with investors and they didn't yet get what kind of business you're building, the best way to show this is to show the competitors, right? And here I really beg you to be clear with the market at which you are competing with others, right? Because you should understand that somewhere you can be competing with other mobile apps on App Store. Somewhere you can be competing in some particular vertical. So you should understand and take the real competitors to your existing product. Yeah, don't mix them up. Don't try to compare your software to books. I mean, physical books, because obviously software is better than physical books. You cannot compare your SaaS to the documents in the corporate company. That's incomparable. We've already gone through this, digitalization. So rather than that, compare your SaaS to other SaaSes in the same field. And thus you will first explain to the investor what exactly are you building. And second, you will show why are you better and which points. And also try to think about the points that are really important. Because sometimes I saw some, comparison tables with, competitor comparison table, and I know teams, the founders, they were highlighting absolutely useless points in which they are better than their competitors. Yes, so you need to understand where you are really better. Okay, then achievements and traction. This is very important because this is something that's always, get investors into the block point. I mean, okay, you're all speaking about this amazing stuff. You have done this or you didn't do this yet. It's not clear sometimes from the presentations. So make sure that you have included some kind of traction, some kind of timeline, maybe some milestones, maybe some achievements and so on, so that we would be able to understand what you've already gone through and what you're expecting next. For instance, I'm here showing to you the slides, our milestones. So they are showing that they launched their web app in January 2020. Then in October, they raised they had 55K of customers, I believe. Yeah, users, and 150K revenue. Then in November, they had the next steps and so on and so forth. And so you see in the footer, you can see the date, even though it's in the future, it's just, exemplary slide. But you can see the exact date at which this slide was updated. So please also update your slides before sending to the investors. I've seen so many outdated slides. It just shows that you don't care about the investor's time and also about your time as well. So why do you do this? Why do you share this deck to investor if you don't care, right? Then market. I'm sure you have a lot of conversation at this program about identifying your market, and then you have the separate session about TAM, SAM, SOM, and so on. Just one small addition here. Please don't just put TAM, SAM, SOM circles on the slide and leave it. That's not right. You should show to the investor that you understand how your market works and what exact piece of this market you are really able to cover with your service within some period of time. You should be, like a fish in the water in this market, and you should show it to the investor. If you don't know how, just Google the slides. They are everywhere. So many presentations, examples are out there. That's easy to find a good example. Then unit economics. That's at the point when you can already identify and calculate them, of course. Until that, you don't have them, so you're just keeping the slide. Next, go-to-market strategy, user acquisition. Absolutely important part where you show that you know how to do business. That's the most important thing. Because if you don't know how to acquire customers and what kind of customers you want to acquire and what kind of channels you should use for that, that's really bad, because investor will not be teaching you this. They can teach you a lot of stuff, but not, the basics of doing business. Again, programs, accelerators, Y Combinator Startup School, go ahead. But you should show that you know how this business should work. Then, of course, big focus on the team, and you should show the core team and their experience. But also, please include information about the rest of the team and the dedication of everyone. Because sometimes it looks like, 10 people are doing the project, but in the end, it's just the solo entrepreneur that is doing everything from A to Z, and he or she just asks his or her friends to do some designs or whatever from time to time. But that's not what investors are investing in. They invest in a well-established team where you at least have all the core positions. You have CEO that will be covering everything. You have CMO that would be attracting customers and working with partners and communication. You have, or it can be either chief marketing officer or chief business development officer, however you name them. You should have someone that cares about the customers if you already onboarding them. You should have developers if the main feature you're trading with is actually your in-house built technological solution. That's really important to show in this slide, that this all was developed by you. This is what you can offer, and this is what you want to put money on. And the last slide, also very important in the investor deck, is what are you asking for? And here you basically should tell that, okay, you're looking for money, you're looking for this amount of money under this pre-money or post-money valuation. Or you're looking for advisors, or you're looking for partners, or you're looking for whatever you need, new team, yeah? For instance, my fund helps with hiring new people after we put the investment in the team. And also we help with connecting with some corporate partners because we have a very vast network of corporate partners, and so we can leverage it. Yeah, this is how we help into startups. And of course, different funds help differently. But you should come with the exact ask, what do you need now in order to, make the next leap? Okay, let's move from this boring slide further. Does anyone have any questions at the moment?
May I ask a question?
Yeah.
Like, for example, especially for pitch decks, sometimes there is a requirement saying like not more than 10 slides or no more than 7 slides once I saw. So which of these 13 slides are can be thrown away or maybe combined into one slide.
How do you think?
Well, problem and solution sometimes are combined. Well, the hello and the elevator pitch can be combined. Well,
you can skip value added to the customer if it's already well and clearly stated in your product solution slide.
Also, can I?
Yes, sure.
So I wanted to ask, but I think this is the answer. I think the unique selling proposition or advantage you can tell in slide with competitors, because like you show the difference.
Yes, it can be. It just depends on the company you have, because again, you are now all working on your own companies. You see it from one perspective, but there are different industries and different companies, and if you have health tech, you present it in one way. If you have a SaaS model, you present it in different way. And this particular structure works mostly for software businesses, for SaaS, of course, and for different so-called hybrid businesses, it also works, like software plus hardware. But if you would add here something more deep tech or health tech, then you would need to add more information about the technology that stands behind your company, right? The research you made, the trials you made, especially for health tech, right? So of course you can combine, you can play with it. It doesn't matter how you actually compose it. I'm just telling to you the content that should be for sure, something that the investor would be looking for. Because all the time at the calls between my managing partner and the founder, I hear, okay, so what kind of technology have you developed? And is it your technology, or are you using something, from outside? Is it developed in-house and you own this intellectual property? Or is it outsourced and you basically don't have any relation to that? And another question is, when did you start actually? When you released your product? It's never clear from the slides. I never saw any investor deck where the founders would define that we have launched here at February 2020. And we got first users at March 2020. I don't know, if I'm doing...
Usually it's in traction,
Yeah, but sometimes it's skipped.
Okay, got it. And one more thing, what I've heard from other, similar presentations, they always advise when you do the unit economics slides to point out the KPIs which will seriously affect the unit economics in future. Like, for example, the number of users, that's or the retention, for example. Like, you are working on improving the retention, this will affect the final numbers, like 2 times, 10 times, or something like that.
Yeah. That's a very good comment. Thank you. You should have these KPIs, or I've named them milestones. That again depends on your model, right? But you should show to the investor what are you expecting next. That you just didn't come with, give me money, I want to do business. No, you're showing that you really know what to do next.
Sorry, where should we talk about our customers? So like profile customer?
You can add it either in a business model or in a go-to-market strategy, user acquisition slides, or however you build it.
So we should not do the apart slide.
You can do this. I mean, if you really have what to say about this, go ahead.
But so you didn't mention it. That means that it's not so important.
It's important to understand the customer at all. I mean, in general, who is your customer? But if you want to go to, more deeper stuff in terms of marketing, like customer persona, description, and all this stuff, you can include it after the go-to-market strategy, and it will show you from a even better side, I would say.
Yeah,
But
and
like
one more thing, when you're stating the problems of the market, usually you have in mind a certain, well, category of clients, one or two.
yeah, you should have, but sometimes it's not the case. So of course, when you're identifying the problem, it should relate to someone, to some particular industry, some particular types of, I know, workers, if that's B2B, or some just kind of demographics, right? Any other questions here?
No?
That's I mean, the structure itself, it's absolutely simple. Yes, you can find it everywhere. I'm just adding the comments, something that many founders are really missing. And my colleagues are always asking about this, like, repeatedly.
No, the problem, so the structure is everywhere differs, no? So I was searching a lot, and so your structure is the one more type, no?
Yes, of course. But you should understand what should be there, right?
Yeah, but logically I understood. Yeah.
Mm-hmm. Perfect. Then,
Alina, can I ask? Yeah. So,
sure.
can you clarify if there is a difference between a pitch deck and invest deck? Maybe you told, but I missed it.
Yes. So pitch deck is something that you have very, like, it should be more, full with images and some associations and screenshots of your demo and so on and so forth. And it should be just a supporting background material for your presentation on the stage. While investor deck is more informative, it has more text, right? Because when you put more text in pitch deck and put it on the stage, on the screen, nobody will be able to read the text. So all the text should be, told by yourself. And it should be just supported with some, images on the screen that can either remind you what you should be speaking here about, or like stick to the audience imagination and impression about your presentation. It's more, I don't know, I have to say, it's like really supportive. You never should be dependent on your pitch deck when you are speaking. It doesn't contain that much information, but it can contain some key numbers, right? It can contain the description of the customer persona if you would be speaking about it, right? It contains all the illustrative information that really creates impression about your company or product. While investor deck is an informative presentation, sometimes founders are just sending it in the form of, Google Docs, just a text that, with all these points defines their business. Or in order to make it simpler for everyone, you're building a nice presentation, you're putting it all in order with bullet points and so on, and you also add in these demo screenshots and exercises and so on. And then you have an investor deck, something from where the investor takes all the fundamental information about your company, something that should catch investors' attention. While pitch deck should make a wow effect, investor deck should make investor to want to, like, here's my money, take it. Okay, so moving on, we have just 20 minutes left. So investment entities, I'm sure you know all of them. Just, when you start fundraising, don't forget to, first of all, understand which one would work best for you at this moment and which one you should add to your investor pipeline. An investor pipeline, it's really something like, CRM with your leads. You basically find the investors, like, first of all, you've identified which one works for you best. And then you're just adding them and you're tracking your, stage of negotiation with them, if they're interested or not. What did you discussed with them on the last call, and so on and so forth. That's very important because some of the startups getting back to the same fund in a while. I mean, there were some startup we talked to 2 years ago, and then a year and a half ago, he came with us with absolutely amazing traction. While at our first meeting, he didn't have anything to show to the investor, and nobody could yet believe in him at that point. But in a year and a half, he came back with great traction, and we have started speaking with him. But he already had us in his pipeline. He already remembered who are the people working in our fund, what they are looking for, what kind of funds are we have enough in our under our management, and so on. He was already prepared. He knew from where to start the conversation. And so even if you're not fundraising at the moment, but you're planning to do it in some foreseen future, connect with investors anyway. Add them to your LinkedIn connections, add them to some spreadsheet or a CRM, whatever, and have them always, under your hand. This is the investor pipeline you can refer to whenever you decide to fundraise. Then also investment entities types and which one works best at which point. Seriously, when someone is coming to our pre-seed seed stage fund with the ask to invest in their company and they don't even have any kind of traction and they just need money to, finish building their product, this is absolutely not the case for our discussion. Why? Because we are pre-seed seed stage. And for those people who just need to raise money to finish their product, there are many other entities that can invest in them. First of all, look for grants, those that are easy to get. Governmental funds, or maybe some accelerators that are not taking equity at this moment, because until you build the product and started selling, there is no point in giving up your equity. Never do this. This is a very stupid step. Yes, so firstly, try to find some money that do not take any equity from you, from your ownership. It still should be all in your hands until you start raising seed round and further, right? So incubators, accelerators that are equity free, grant giving organizations that are also equity free most of the time. Then one more thing, credits from tech companies. Wow, this is just amazing. If you go to IBM for startups, you will see that you can take 120,000 credits, in dollars credits, and you would be able to build your product on their cloud infrastructure, and you would be able to use all the tools they are providing, usually for money. For startups, they provide it for free, and you can be using it for, I know, half a year, or even more. Then if that's not enough, try to transfer it to Amazon Web Services. They also have offer for startups. There is AWS and AWS, Activate, that also offers huge amounts of credits for startups to build on their infrastructure. And then if you need a good free CRM, and maybe you need some training in sales, business development, or marketing, HubSpot for startups. They also offer a lot of credits and absolutely free trainings on all the sales and marketing related stuff. No need to go anywhere. No need to fundraise money for your initial marketing or to test out your first, experiments with, A/B testing, whatever you have on your roadmap. You just take these free credits from these companies and you save a lot of money. You don't need to fundraise until your seed stage. Then what's next? Next, if you feel that you already at the point where like you got stuck, you don't really understand where to move further. You have tried different experiments with your product. You have some customers, but retention is low, or you don't see a big month-over-month growth. You basically got stuck. At this point, you can look for business angels. You can go to business angels directly. You can go to business angels networks or syndicates, and you can speak with them, and you can invite them to invest in you and also to become the advisor. Sometimes if you are the solo founder, you can even invite these business angels to become your co-founders. And that would be a great moment because they already have experience, they already have working businesses, they are given money, they are taking some kind of equity, and they're working with you on your company all the time. This is just perfect scenario for you if you don't need to start really huge scaling. So until that moment, in order, to find the product market fit and start really having all your diagrams growing, just go to business angels. And only after that, when you understand that everything is going well, I have tested out my local market, I am pretty sure that I am the best at this market, and I just want to grow further because I'm now, just standing on the same place. I want to grow further and I need some money for that. Only then you're going to VC fund. And only then this is the time for you to give your equity to the funds. And it should be like 10-15% maximum at this point. Right? And then, of course, there are different VC funds. Firstly, you speak with pre-seed seed stage guys. Then you're going to guys that are given round A with like a couple of $1 million tickets and so on and so forth. Also, one more point, actually 2 points I wanted to focus on here is always like look around at which market are you operating, and be realistic with what you are asking for and what kind of valuation you have. Because if you compare average tickets of European investors and Israeli and American investors, you would see that the difference is very huge. Because what seed stage investment or seed round investment for European fund is like from $500,000 to $1 million to $1.5 million. For Israeli investor, seed rounds is equal to $5, $6, $10 million, and almost the same for the American investor. That is why when I hear that some Israeli investor is investing in non-deep tech company $200,000, I don't believe in this deal. I don't believe that's really happening, because that's nonsense. The really good, well-established, well-connected Israeli investors put, I don't know, minimum a couple of $1 million, and they are usually looking for a very well-working business or a very deep tech, like science-based company. That's what they would be looking for. Something's going on in the... Sorry? Yeah, full. Hey, come on. This is why I don't like Zoom. Sorry, guys. Okay. Now we're back. Okay, so then when you have come to the stage when you are selected the investors for your pipeline, be it business angels or be it actually VC funds, you should always check if they are right investors for you, for your company, for your industry. Because at some point when your business is really cool and thriving, investors start coming to you by themselves. They are texting you, they offering the investment for you. This happens quite often in my community, I would say. And you should really understand if they are the right people for you. So when you are selecting investors, check what kind of portfolio they already have. If they have similar projects, I mean, if you're, for instance, building ad tech company, you should check if there is already any ad tech company in that VC's portfolio, and then find it, go to their website, go to their Facebook, and check how are they doing actually. Are they thriving now after the investment? Are they still exist even? That's very important to check the portfolio, because the next point here, expertise, is directly related to the existing portfolio of the fund. Then you can also check, and it may be something that is already during the conversation with the investor. You can check if they are investing by themselves, or if they have some kind of investment commission that makes the final decision, or however the fund is structured. Because there are the funds that have their own money and they are just investing, and they are the final point of decision. While there are some funds that consist of money coming from different sources, maybe from governmental funds of funds, maybe from some limited partners, and so on. And the pace of going through this deal and closing it would really depend on the structure of the fund. So check this with the investor. Check where the money from, let's say, if this is like private money or public money, and who's making the final decision. Then geography. That's what I always say to the startups from our region. Guys, don't really rush for the US market. Check your neighboring markets, because they would be easier and faster for you to cover. And that's easier for you also to find the investor that would help you here with these markets. Like example, B-Value. It's well established in Poland, so it would help to see startups or CIS startups to enter Polish market, the first point, and then go further into the European Union market. This is our geography. While, for instance, our friend from Israel, he's very good in the US market. So depending on which market you want to scale to, take the investor from that particular market. And then the partners. Check if this fund is partnering with some big companies you might need, be it telcos, banks, or whatever industry you're working with. And then the last point here is check if this fund is operational or not. Because, for instance, some of the biggest global VC funds, I don't remember exactly, so let's say, just hypothetically, Andreessen Horowitz, they might not be operational. What does it mean? That they will not help you with almost anything after they put money into you. They have closed the investment round and they are off to look for other startups to invest in. While operational funds, after they put money in you, they start working with you shoulder to shoulder every day, and you communicate with them all the time. You have calls, you have meetings, they help you to connect with other partners or potential clients, customers, they help you to hire people in your team, and so on. So check on the website, check on the presentation if you get it from the investor, if they are operational or not. And then ask for whatever you need accordingly. So how to speak with the investor? First of all, research. You should be speaking the same language. What does it mean? As I said, go through the investor's website, social media, and portfolio. You should already understand their geography, their investment focus, domains, stage they are investing in, etc. I mean, you would really look dumb if you would speak to, you know, round A investors if you were just raising pre-seed round. This is the case with most Czech VCs, as far as I know. They all invest in from something like pre-round, round A, and higher. So that's why I don't know where the earlier stage startups take money in Czechia. Then prepare all materials. You should send investor deck, first of all. You should have demo access. You should have client's portrait. This is what you can either include in your customer persona slide, or you can speak about it at the call with the investor, or at the meeting if you're lucky. You should also have fin model and projections, cap table, and you should be able to tell what kind of experiments you already done and are planning to do for your customer acquisition. Then be nice. First of all, be on time for the call and talk politely and clearly. Seriously, I've seen really different calls between investors and founders, and some of the founders were coming to these calls like you know, like the investor owes something to them, or like there are no more startups like this in this industry, and so the investor should, you know, leave everything and invest in this startup and love them and be with them and leave all the other portfolio startups. Seriously, there were such cases, and so please don't do this, because after such conversation, even if you have really good product, the fund will not speak to you anymore. Because again, especially if it's about operational funds, you should have to, you know, work closely further after the investment, and that means you should be on the same wave with the investor. So, you know, build the conversation properly, be polite, be clear with what you're saying. Yeah, also there were some cases when, like, at this moment the founder says these facts, and in 5 minutes he says something absolutely on the contrary, and you don't understand. So what kind of numbers do they really have? Don't argue. That's really important. Again, if you're coming to the investor, that means that even if you are really good in your industry, you still need something to learn in order to prosper, in order to grow and scale. So please just show some respect to the investor. You come in for the advisory. Sometimes even if you are not going to close the round with the investor, during the conversation, they would still give you some very valuable advice. So you better make notes during this conversation and try to understand if, like, first of all, if you're communicating your company correctly. That's also the case. Sometimes there were cases then when founders could not really communicate their company correctly to the investors. And of course, obviously, nobody would come back to you and, you know, start asking you 10,000 questions to really get into your product. No, you should show it by yourself. Okay, next. Actually, materials for the call with the investor. So imagine you have already sorry, just skipped a little bit. So negotiations. Well, how it actually works with the investor and what you should expect. Firstly, introduction. Better if you have introduction from someone else, from some third party, or maybe from some other fund. Funds speak to each other, that's okay. And if you are not fit for one fund, you can ask for introduction recommendation to the other fund. That's totally okay. Then after you've sent the investor deck, and if there is some interest, you can have an intro call. You provide all the information they ask for after this call, as I mentioned before. And when the investor has everything they need, they start doing some kind of research. So just give them, 1-2 weeks to do this research, understand if your company is really something big and they want to invest or not. After that, if the investor is not coming to you with the answer, you can ping them like, hey, just wanted to kindly ask you if you had a chance to go through my materials, maybe you have some questions, maybe I should clarify something, and so on. Be really nice in your communication, because thus you show your attitude. You show that you care or not. And if you don't care, investor will not speak with you any further. So you should really show that you care in your communication. After
Can
that,
I ask?
Sorry?
Can I ask a question?
Yeah.
After how many kind reminders it makes sense to stop to touch the guys from the fund?
I don't know. It really depends. But you can do this the same as you would do with sales emails.
Never stop?
I'm never stopping.
No. 2 reminders on email. And if you see, like, first of all, you can install some, software to check if somebody has opened the email. That's also a good thing. But if you don't get any reply within 2-3 weeks and even more, and you've sent already 2 kind reminders, go and look for these people in LinkedIn and text them there, or text to others. I mean, sometimes, like, firstly, you're speaking with one representative of the fund, right? And so maybe this particular person is not that good in the industry, but maybe the others on the team would really like your company. So if nobody's answering to you within a couple of weeks, not months, weeks, you should try the other representatives of the funds. You can reach out to them via LinkedIn. You can try to, parse the emails from the fund's website. That's also good. That shows that you, can find a way. That's cool. So try to reach out to the other team members. That's absolutely okay. I saw these cases as well, when some of the team members were not just impressed with the company, but then another one met the founders at some conference and got so much impressed that he or she just brought this team on the table and they started negotiating the deal. So don't give up. And also one more thing here, that's from the fund side. If the fund is expecting from you some kind of materials, don't make them ping you. They will never do this. They will just skip your deal and go further. So if you said that, okay, I will send to you the financial projections within a week, please do that. Or forget about this fund. Because if you cannot really find a common language in the very beginning, that means you will not be able to work after the investment either. So, don't waste your and the fund's time. Check the time, check the promises, and try to keep to them. So after all these reminders, after you've provided all the information they've asked for, you can have another call now with analytic or maybe investment director or the part of the team. I mean, like a couple of people from the fund all together. And then you are again going through all the presentation, because, different team members in the fund have different experience and field of expertise. So it's better if you deliver everything to them properly and they get impressed with your company, like all of them. Then it would be really easy to negotiate the deal with them. Next, give extra materials, introduce to the other investors, advisors, accelerators. I know that if some of you would start speaking with my fund, my investment directors would ask you to introduce them to Zhenya or to Mary, somebody from the accelerator you've gone through, because they would be looking for the recommendations about you. The same, they're always asking me to do some kind of, research or, check. For instance, if some startup is coming from Belarus, if my fund likes them, I go to the Belarusian ecosystem and I start asking everyone about this team. How does it work? Like how it's like to work with them? Are they reliable? Are they credible? And so on. I'm going and asking this to different angels in Belarus, accelerators, hubs, wherever I saw the startup, or if I have some, common friends at Facebook, whatever. I'm asking for this reference. So be ready to connect with whoever can recommend you to the fund. That usually works for those that are from different countries, because of course, if you're on the ground, you can just do a couple of meetings and solve this all. But as the fund can be investing cross-border, then of course you should provide some kind of check and references. Then you can have another call or a couple of them. That's absolutely okay. Again, they are going to give you money, so you should be ready to tell about everything. Then if it's all good, everyone likes everyone else, I mean, between fund and between team, there is some kind of relations already, then you're coming to the term sheet. Term sheet is a non-obligatory document, but it has like two main points here. First of all, term sheet would be the fundament, like the basics for your investment agreement, which would be already obligatory, of course. And also term sheet still has a couple of points that are already abiding. First of all, most of the term sheets would demand from you some kind of non-competition, that you cannot already speak with other investors within the next 30 days, for instance. Or it can tell you about some kind of commissions you should pay for due diligence or whatever. But other than that, everything else still can be negotiable after you sign the term sheet. So check it with the lawyer, but don't get too deep into it. There's no point for that at this moment. Then you're going through due diligence. After you sign the term sheet and your lawyer said it's cool, you're going through due diligence. So investors are collecting.
Sorry, can I ask a question about the
Yep.
term sheet? Is it the same in all the legal environments, like for example, the UK and Europe and US, or are there differences between how important is this term sheet and?
It's equally important or not important everywhere, but the format itself and the points that are included in it are different. And usually each fund has its own term sheet template they are using. And then, of course, they can change it based on the negotiations with you.
Okay, thank you.
So I wouldn't say that there is any standard for this. The standard only is the process itself. Yes, and this is the right process. This is also, something for you to check if the fund which you're speaking with is, credible one, because they also should follow this if they have some, abundance or compliance with the law and so on and so forth. They should have.
Yesterday we had a presentation about that mentioned toxic investors and what to check to avoid them.
Yeah, cool. That's a really good one. And then if everything is okay with all the numbers, your team and so on, and you have the business plan in place, then you're coming to signing the investment agreement. Again, it's different everywhere, but it should comply with the local law. And so also one point here, if you are fundraising money from European investor, but your company is registered in Delaware, you should really check how it all complies with each other. So you should have your lawyer in Delaware, and you should speak through all the points with the investor in Europe. Like be careful with all these compliances so that you wouldn't, regret further. And I think this is the last thing, because I've already overcome my time. Materials for the call with investors. So I'm not the finance manager, so I will not tell you here any kind of details, but I can tell you what you should have to present for investor at the first steps of your conversation. First of all, cap table. Again, you can Google what is it, but the main point that should be there. ownership structure, what kind, like how many founders are there and how much they own. Is it like 40% per two co-founders, or do they all have 30% per each? Or there were some cases then there were two initial co-founders, they owned 40%, and then they've invited the third one and gave him like 10% for some probation period. You should show it. And of course, if you have any kind of investments until this moment, you should also show how much of shares are taken already from your company. That's very important. I don't know if you have this session, but it can be really a separate session about non-investable startups. Oh, I can actually share the blog post about this to you.
Yeah, yesterday they told us about the situations when you have a lot of convertible notes that in the end, when you reach an investment round, you go minus your share of business.
Yes. So be careful with that. That's why I told you not give out any shares until you really need that. Yeah, go and look for some free equity investments, credits, and so on. I mean, like not bank credits, but credits from tech companies. And don't give up any shares at the beginning, because you would end up with nothing. Then also on this cap table, you should have the pre-money or post-money valuation. I'm sure you already know this. Second, fin plan. Here you should be clear with what you already have, and you should have the latest information, the latest updates about revenue, about all the metrics, unit economics, as was mentioned at the previous session. All these things should be in your fin plan, like on one table, maybe on one tab, and on another tab, you should have the projections. And sometimes the founders are coming up with 3 different projections, like optimistic, realistic, and pessimistic one. So we can also show it if you have time to play with that. Or you can just show your projections if you get investment and if you don't get investment. Yes, to compare. And the last thing, sometimes startups are coming to investors with the Google folder that contains everything about their business. It's called data room. You can Google that. It has everything in this folder. Investor deck plus one pager, just really one page with the core things about your business. Fin plan and projections, comp table, and even your own term sheet you would like to, suggest to the investor. That's also possible. Then you can, combine your term sheets and have the best one for you both. So you would really make it easier for everyone if at the point when you decide to fundraise, you just prepare this data room. Otherwise, it takes ages for the investor to ask and pull all the information and numbers from the startups. And it's worse for the startup itself because they don't get money for longer than they could. So really be prepared for the calls and for all the conversations. I think that's all. So you must have already talked about term sheet at the previous sessions. Just you can remember that there are different types of them, and whatever is included there also depends on the round. I mean, like if you raise in pre-seed seed round, the term sheet would be like 5-8 pages. But if you are raising the round A and over, it would be already bigger a little bit. It would contain cap table in the appendix and so on. But again, that's something that you discuss with your investor, and it all case on case basis, case by case. Yes.
Can I ask a question again? I told you in the beginning that we almost closed a deal with the fund, but there was a clause in the final document, the agreement we had, because that fund offered us huge help with business development, promised. So we had an agreement that they had some kind of, well, let's say vesting period and precise KPIs that they should achieve helping our project, forgetting their amount of